and welcome. You're watching Indian Open right here on Bloomberg Quint Live. Asia as a pocket is looking slightly subdued this morning, so you've got a 0.5% cut in Japan. China is trading weak by about 0.25%, while Hong Kong loses closer to 0.75%. But for India, a slew of measures and a slew of government announcements that have been coming in. They've come prepared with some real ammunition.
Yeah, I mean, just don't. The question only, Devina, is, and we'll get in management to speak about this. The question only is that now what is happening, it's probably a sign of acknowledgement that yes, something needs to be done. Is that enough when world over other EMs are giving stimulus of large natures? Will we have a non-monetary stimulus inducing announcements doing the desired effect? It's great that it is happening. The question is, does more need to be done?
All right, and let's pose that then. Foreign players have now been allowed to invest 100% in contract manufacturing, an area where Dixon Technologies is one of the biggest players in India. Joining us right now to talk about the implications of this is Atul Lall. He is the company's managing director. Thanks so much for joining in, Mr. Lall. A quick initial take of yours with regards to this particular announcement.
So this is always welcome, opening up the sector for more investment. However, in our sector of electronic manufacturing services, this kind of thing was already there. So many large contract manufacturers have 100% equity already. So I think this is more pertaining to the other sectors. In electronics, we already had this policy measure in place. However, it's all welcome because more investments are going to come in. It's going to trigger more manufacturing, more design-oriented manufacturing. It's going to help in building up the export base in electronics. You would have read some reports, which I was reading yesterday, that the electronics imports deficit is compressing in India. So these are all very positive signs.
Mr. Lall, good morning. So not just you as a listed entity, but companies in electronic contract manufacturing, even in the unlisted space, because you're saying this was already there, have we seen large dollops of global OEMs or global money coming in and trying to buy more than that 49% stake in the space?
So lately I'm seeing significant interest of companies from Far East and from China looking at this very seriously. I can see some flow of investments already started.
Does that go? I mean, I'm just trying to think out loud. I mean, what would a move like this do to the space at large? Say, for example, in the case of Dixon, you are large, but some of the small size contract manufacturers, with the advent of global money coming in, is it a push for expanding capacities, or is it also a global wherewithal that comes in? Because I can understand in the past 15, 20 years ago, when large global money came in, they brought with them expertise. Nowadays, Indian companies reasonably well set of contract manufacturers. So what does this large dollop of money, if it does come in, do to that contract manufacturer, sir?
So the comparative element definitely enhances. You see, the smaller companies in India with lack of resources, both on the financial side and the technology side, are going to find it difficult to sustain. So either they'll have to align or participate with the foreign investment, or they're going to find it very difficult. So you need a certain scale, you need a certain technology base to grow now, because it's opening up. So there will be a significant transformation in the electronics manufacturing industry ecosystem.
The other part is with regards to what this does to competition, Mr. Lall, in the industry.
Sorry?
What does this do to the competitive intensity in the industry, according to you?
So comparative, there is already a high comparative element because electronics manufacturing, contract manufacturing is a relatively low margin business. So this is going to further enhance, undoubtedly. But the scale is going to increase, the opportunities are going to increase. It is very much possible, and I think it's going to happen, that India will emerge not only as a contract manufacturing base for servicing the domestic Indian market, but exports market. I can see that traction already happening. So a larger opportunity with a larger comparative element.
Mr. Lall, just one more question. I mean, we've been hearing commentary, and this is with regards to, the easing of the 30% local sourcing norms for retailers, single brand retailers. And from the electronics industry, Apple is a name that is coming up, and they've already spoken about how they want to make their presence felt in India, and this is going to be a big additional kicker for them. Do you see that, as having any meaningful impact? And how does this, is there a thin line between what they could do in terms of contract manufacturing or what they could do in terms of their own scale?
So I feel the information that I have is that Apple has already started manufacturing within India certain models. There is also a possibility of the Apple phones being manufactured in India. They will be exported out. I don't know the numbers that the present status of the manufacturing ecosystem with an existing partner, and does it meet the present conditions or not. But I think it's just a matter of time. It's going to be, they are going to qualify for opening their single brand retail stores in India very shortly. It's just a matter of some time.
Got that, Mr. Lall. Thanks for the clarity. Appreciate you taking out the time. And carrying forward that topic, the government has also relaxed the definition of the 30% local sourcing norms in single brand retail. It has also allowed players to begin online sales without opening brick and mortar stores. Let's discuss the implications of some of these measures with Lalit Agarwal, the CMD of Mart Retail, who joins us on the phone line right now. Mr. Agarwal, thanks very much for taking out the time. Obviously, ease of business improves right now. The 30% local sourcing norms, will work in favor of some of the other bigger players which will come in. But for you, how does this play out for you, sir?
No, I think India being a better market and creating lots of jobs and then bringing in more foreign investment will obviously boost the economy, and boosting the economy obviously then means that more money in the hands of the common people. And I think with the introduction of all these new players and single brand retail, there's a large amount of skilled workforce and organized mindset of retailing coming into India. There are a lot of things which we will be very happy to have it, and it brings a great environment for even foreign investors to invest in India and look at India, and it gives a lot of confidence to as a retailer to us that there's a big market which is moving up. So no, I think it is a positive move from the government, and it is largely seen as positivity because when it brings in a lot of skill, like in apparel retailing or apparel manufacturing, there has been a lot of lower investment which is happening in this sector. So I think this will also bring in investment in this apparel manufacturing, wherein Bangladesh is overtaking us. So how do we prevent that piece so that we are able to produce more better apparel and a better infrastructure and larger factories can move up?
Agarwal, good morning. Are you a single brand retail unit, because you do have your own manufacturing as well, and would this benefit you individually?
We are neither a single brand retailer nor we are a manufacturer. So we are neither two. We are a multi-brand retailer. We do have private labels, but those are multiple labels, but we only don't deal with private labels. So it is not something that will directly benefit us.
Okay. The other question is, with this advent of single brand retail and local sourcing norms being easier, etc., would it have an impact on some of the resellers of large global brands within India, Mr. Agarwal? Do you see that as a possibility? Companies which are doing the reselling on the part of these brands will now probably get impacted a bit. Is that a possibility at all?
Yeah, obviously, all those non-efficient joint venture partners or so-called franchisees or master franchisees may get questioned and will obviously be asked to perform better, or else the brand can come itself. So I think that obviously gives a tougher challenge for everyone, and it's a better challenge. So I think it's good to have the lion inside and let them play to the Indian market. I think it's going to be a really fantastic market which everyone wish to have.
The other angle, obviously, here, sir, is the fact that they can start online sales before they get their brick and mortar stores going. How does that change the dynamics of the industry?
So I think once again it's a good move. Why not? And it's so good because ultimately what the government wants is contract manufacturing, and then if the products are getting manufactured in India and the brand exists here, So why can't it's still online? Like IKEA started doing it in Mumbai, and it could have done before. So there are now people are digital age, and people want to have convenience. People want to access product, and then they can supply from the warehouse. Large brands and our bigger brands or international brands are for better people who are more skilled and more educated and more knowledgeable. So they can obviously access these products through online medium. So there is no need of brick and mortar also at times. So I think whatever government thinks, it's a good move. It's a good move.
Okay, Mr. Agarwal, we'll leave it at that. Thanks much for taking the time out and speaking to us today.
Thank you.
The two companies in this space don't get directly impacted, but giving you a sense of what could happen here. Let's try and make more sense of this with Parthiv Shah, Director at TRACOM Stockbrokers, to try and figure out what's the impact on some of the listed entities out here. Parthiv, great for the industry, so we've established that. The question is, how does one try and play this within the listed universe? Have you been able to analyze which companies within the listed universe get impacted as a result of the slew of moves announced?
Good morning, Neeraj. See, Neeraj, if I'm allowed, I would just like to set a background for this talk. One thing that what we know is that the FM during the budget speech had mentioned the word FDI a lot many times, and now it's very heartening to see they are surely walking the talk, if not running the talk. And I think we know for the fact that banks are at this juncture not able to disburse huge corporate loans for many of the players in this segment to kind of scale up immediately. So I think this FDI route in terms of opening up, which is opened up the way never before that we have seen in our country, I think it's very, very heartening news. But let me be very honest with you, Neeraj. I think it's at this juncture, it's too nascent to try and give a bet in terms of which companies will surely benefit. Because say, for example, in things like contract manufacturing, we know the obvious names, but we would also like to understand what is going to be their strategy going ahead. It's going to be like 100% FDI in contract manufacturing, but are these guys going to just come in and set up their own plants, or going to maybe have a joint venture with someone like Dixon Tech or someone like Ember? Because I think we know for the fact that there are a lot of companies internationally who are wanting to come in India, not necessarily wanting to partner with the local guys because they don't want to share their own technology. But I think this is a very, very good move in terms of enhancing the productivity in terms of manufacturing in the country. Let me even talk about something like commercial mining, coal mining. We know the obvious, I think the problem is going to happen with Coal India. And this has been the intent of the government wanting to break the monopoly because it has been an inefficient entity. So I think even in commercial mining, we are going to see a lot of companies. And now in this 100% commercial mining, what's going to happen is that it's not only about like just mining for captive use. It's going to be mining for even selling it as a merchant basis. So it'll be very, very interesting to see that how many of the domestic metal companies are able to attract these foreign players to have some sort of joint venture with them, which improves their capital enhancement. And I think it's going to be a little difficult, Neeraj, at this juncture for me to give out names based on the different players. But one bet, if I were to give, would be Trent. We know for the fact that this has been a very, very stable retailer from the Tata Group. They have been doing extremely well. Their Zara brand has been growing extremely well. And I think any sort of further FDI in retail in terms of the way it has been discussed, I think Trent could be one key beneficiary of this trend going ahead.
All right. Nonetheless, they also have that Massimo Dutti brand, which they've got under Trent, and it's a financial joint venture, 4951 in favor of Inditex of Spain, which houses the Zara brand. But according to them, this is really not a strategic investment. This has only been a financial proposition for them because the brand communication lies with Inditex and the other aspects also. So it's something that they're looking to expand on, but it's not something that should be considered a strategic investment from their standpoint.
Okay, that's part one. Part two, Devina, what about Nestle and Indiabulls Housing Finance? You did a story on the Nifty inclusions and exclusions. Will the Nifty curse hit them?
Well, you never know because Nestle just had that one-time spike a few days back when the norms were changed for the inclusion in the Nifty, and the criteria was made a little bit more flexible to include some of these names. But this actually increases the weightage of consumption names now on the index. So probably looking at a little bit of a balancing act here. they're slightly more defensive in nature, less volatile in terms of pricing. So with IT and consumer names now, doing almost 20-25% on the index, that kind of offsets the volatility of the banking space, which holds about 30%.
Yeah, which is about 35%. Yeah, that's an important point, by the way, and pretty interesting as to what this would do. So Nifty weightage from September 27, the point that I think Devini was trying to make. Financials still overwhelmingly but higher, but well, the others are clawing their way back. Let's wait and watch what happens here. But there is more to this, and we'll talk about what happens to some of these Nifty 50 companies as well. Once they come in or otherwise with Parthiv. But it's time to get in our research team to talk about some key stocks in news and beyond, of course, the FDI norms that have been announced. So let's talk about that and the other stocks that you should keep an eye out for. Sameet and Nikki join in to talk about that. Good morning, both of you. Nikki, good morning yet again, of course. But Sameet, let's start off with you first, the stocks in news.
Well, I'll start off with Axelia Solution. The company has reported its first quarter numbers and the revenues of the company were higher by nearly 10%. Net profit increased by nearly 21%. EBITDA was higher by 12%. On the back of this, the company's margins also came in higher at 36.5% in the first quarter of financial year 2020. Secondly, Piramal Enterprise will also remain in focus because the company has deferred the issue of its non-convertible debentures worth nearly 3,000 crore rupees to a future date. Now, this could be because of the subdued demand that we have been seeing in the bond market. IIFL and L&T Finance will also remain in focus because IIFL Wealth will be acquiring L&T Finance Holdings wealth management business for nearly 230 crore rupees. Now, the group has entered into a definitive agreement to acquire this 100% stake in L&T Capital Markets, that is the wealth management business of L&T Finance Holding. DHFL would also remain in focus because the company has yet again defaulted in an NCD interest payment worth 23 crore rupees, which was due on August 28. Wockhardt will also remain in focus because India Ratings and Research has downgraded its rating on the company's long-term bank facilities and short-term bank facilities to BB+ and A4+ from BBB- and A3. Now, the reason behind this downgrade is due to this refinancing risk that the company has. Along with that, the R&D expenses and regulatory overhang are the three major reasons why this downgrade in the credit rating has come in for Wockhardt. Also, Balaji Amines would remain in focus because the company has completed the registration process with EU, that is European Union, for ethylene diamine. Now, this registration process will allow the company to supply this product to a large number of customers in the European market. So that stock would also remain in focus today.
Well, let's wait and watch what happens to some of these companies. What are brokerages saying today, Nikki?
Well, two companies specific and one is more on the broader front. When we have UBS on Indian market strategy, where it said that the key policy push would be able to help tap golden opportunity that lies ahead of India. It says that the step to further aid integration of India manufacturing into global supply chain. However, it expects more measure coming in given the scale of China's manufacturing. And at the same time, it suggested that domestic pull and global push factors for FDI flow to India remains fairly favorable at this point of time. Other brokerage that we have is UBS and Kotak Mahindra Bank, where the counter has been downgraded to a neutral from a buy, and the target price has been cut to 1,620 from 1,650 that the brokerage had earlier. It suggested that cautious outlook would mean slower loan growth for the bank in the near term. The valuation provide very little upside from here on, and the premium at this point of time is high as compared to that of peers. It's also gone ahead and cut the earning estimate by 3.5% to 4.5% for FY20 and 21 on weaker outlook. On the other side, on the brighter side, we have Citi on Polycab, where it's had initiated a buy rating with target price of around 736, which indicates the potential upside of more than 20% on this counter. It says that the stock at this point of time is pretty well placed to capitalize on the growth opportunities of all cables, wires and FMEG, that's fast moving electric goods. Apart from that, it says that the company has a strong balance sheet and cash flow, which has been improving over a period of time. And also it expects the EPS to grow at a CAGR of around 26% from FY19 to 21.
Okay, thanks a lot for that, Nikki. So those are some interesting names to monitor. Actually, Parthiv, maybe a Polycab since we're on that topic, and then we'll get to the Nifty inclusions, exclusions too. But do you have any views here on Polycab? Is it a stock that you would consider worth investing?
Certainly, Neeraj, we are very positive on this story. So I think this is an industry, the cable and wire industry, if I'm not even talking about the FMEG, fast moving electric goods segment, which they're trying to grow and scale, because that is more of the B2C business, which always brings in better valuations also for the company. But even the cable and wires business, this is an industry which is growing at a conservative rate of 12 to 13% at a point in time where we know the real estate sector and a lot of industrial sector is not really firing on all cylinders. This is a sector which certainly has a potential over the next 5 years to grow at a pace of anywhere between 14 to 15%, assuming a normalized rate of growth for our industries and even the real estate segment. In which case, here is a guy who is a market leader and has massive scale, and they are not dependent upon their scale in terms of subcontracting. They have in-house scale, which is extremely important, I believe, because they can maintain the quality, and along with the fact that they are also trying to position their brand and the range of cables and
Parthiv, excuse me, Parthiv. I would love to talk more, but you might want to hear in this conversation as well, because joining us right now on the phone line is one of the architects of the latest changes made to the FDI norms, Mr. Guruprasad Mohapatra. He is Secretary of DPIIT. Mr. Mohapatra, thank you so much for taking the time out. Well, everybody's happy with the norms that have been announced. Can you tell us as to what the thought process that went behind this? And is this the first set of other things that will come out in due course of time as well, sir?
As you know, after the election of the new government, a lot of changes are expected. There is an unfinished agenda which has been started from the last term. So we've been working on this. It was also mentioned briefly in the finance minister's budget speech. She indicated as much that the reforms in FDI are expected. So we're working on that, and that's what came out yesterday.
This FDI for merchant miners. Now, FDI was allowed for captive coal mining so far. This increases the purview as well. The question is, a lot of brokerages which have written on this, sir, are saying that in the past, when FDI was allowed in some of the other largely government-held sectors, we haven't seen enough investment, and some of the other regulatory hurdles might still not bring in money at a faster clip in coal mining as well. Your thoughts out here, sir?
This reform in FDI in the coal is a consequence of the earlier cabinet approval which came on the coal auction policy. This is actually an offshoot of that and a natural consequence of that. So now, if you recall the earlier cabinet resolution which happened a couple of months back on auctioning of coal mines. So obviously those which will come now, FDI will be allowed in that. It will open up the sector, and there is no restriction of captive sales. So now you can sell in the open market. And also the associated infrastructure like washery, sizing and all. So that's a major relief, and I think since the policy is clear on auctioning once the coal ministry does it, there will be, I foresee a lot of possibilities in that.
Good morning, Mr. Mohapatra. Just to get a sense from you, is there any back of the end calculation as to how much all of these measures are likely to boost the FDI numbers for the consecutive years to come? Because we've been seeing a slight bit of a slippage in terms of the overall FDI that has been coming into the country.
No, I won't like to make a guess like that, because firstly it's too early, and secondly it's not proper to guess like that. But these activities that have come, these decisions that have been taken, these have been coming out of a lot of discussions we are doing with the stakeholders. We see a lot of interest in this, precisely these activities which have been approved by the cabinet yesterday, be it single brand retail, be it coal, be it contract manufacturing. So these are not just done on a drawing room exercise. They are based on a lot of interactions that the ministry does, the entire government does. And so based on that, and I think there will be a lot of possibilities in this.
Do you think this will integrate in the Indian manufacturing into the global supply chain?
Definitely. This is a very major initiative towards that.
Right. The other
and as the Commerce Minister clarified yesterday in his formal press briefing, so the global value chain has a different consequence, a different pattern in which it operates. And with these initiatives that we have taken at the opening of the sector, is just to fill up that gap. So I see a lot of possibilities in this.
Right. The other aspect obviously will be, the fact that, we've been hearing conversations of how the money that will come into the country is going to fill the gap that probably, some of these segments are finding difficult to get through in terms of internal sources. So do you think that is a good enough amount that could fill this gap?
That's precisely the purpose of FDI. It is basically to add to your own investment capacity, domestic investment capacity. It adds to that and it brings a perfect synergy. These are the sectors where we found there are gaps, and this will be an ongoing exercise. It's not that it ends. And yesterday, the Commerce Minister also clarified that though there's a global slowdown in FDI, in India the pattern is different, and with these measures we expect further boost to the FDI in India, particularly in some of the sectors that have been further opened up yesterday.
Just one small clarification and one forward-looking statement, sir. First, a clarification. Digital media did not have limits earlier. So this technically what has been announced yesterday is not a permission but a setting of a limit of 26%, right, sir?
It didn't have any limits in the sense that it is not mentioned at all. So there's a lack of clarity. So it was felt that there should be, just like in the print media, there should be a clarity. It should be a separate category by itself. We better recognize that. And then there's a limit which is prescribed through the government route, approval route.
Okay, just one final question from mine, sir. There's talk of some WTO compliant export promotion schemes in the works as well. Anything to that effect that you can speak about, or by any timelines thereof?
No, that is definitely an ongoing concern that the entire ministry is working on it, as well as many allied ministries. And obviously, India would not do anything which is not WTO compliant. But within the framework of WTO, all the ministries are working on that, including our Ministry of Commerce and Industry. Okay.
Thanks so much for taking the time out this early in the morning and speaking to us, Mr. Mohapatra. I appreciate your time.
Thank you so much. Thanks.
Well, that's the Secretary of DPIIT. Dramatic, hoping for some monies to come in. Well, time to talk about trade. We've spoken to Parthiv about the impact of these things. We'll talk about the Nifty changes as well. But Sameet Chavan of Angel Broking with us to speak about the charts, as is Hemen Kapadia of KRChoksey. Gentlemen, both of you, good morning. Thanks for joining in. Sameet, quick thoughts out here. Expiry day. What do you expect the Nifty to do? What's the trade here?
Hi Neeraj, see, as of now, there's no trade, but yes, we are seeing a range at least for now, 11,100 on the higher side. Yesterday we saw a good pile up in 11,100 call, and on the low side, 11,000 put riders are still active, 40 lakh shares still are there. So we believe that, if you can go long around the lower end, so if Nifty gives a dip towards 11,000, that would be an opportunity to go long, and immediate target would be around 11,080, 11,100.
Hemen, what about you? What's the Nifty strategy for the day, or the Bank Nifty strategy for the day?
Actually, I'd agree with what Sameet said. Neeraj, very good morning to you. Thank you for having me. I think it's not a very tradable day today, but I still feel I'll have a similar refrain. Bounce are not yet over. On a decline, not at current levels. The Singapore Nifty is showing a small decline, so I'd buy the 11,229 September call option. At 115 stop loss 95, target 150. This would be probably a 7 trading session trade, Neeraj.
Okay, got that. Let's talk about individual stocks as well. Sameet Chauhan, what are you recommending this morning?
I'll be with auto ancillary space, Ashok Leyland, which has been giving decent recovery in last 1.5 weeks. Yesterday we saw mild profit booking, but we would interpret this as a buying opportunity. Stock is poised for good relief move. Target would be around 72, can be bought with a stop loss somewhere around 63.8. And apart from this, Escorts, which has been our preferred bet since last couple of weeks, has already given more than 15% recovery in last 4 days. Yesterday there was a muted session. So again, we would interpret this as a good buying opportunity. Target remains around 518, can be bought with a stop loss around 477.
Okay. Hemen, what about you?
Yeah, I have something more from a slightly intraday point of view, Devina. A sell on Bajaj Auto at 2770, stop loss 2785, target 2740. Overbought, negative divergence, crossover sells by the mechanical indicators on the hourly charts. Second one, Devina, is a oversold situation buy on Cummins at 567, stop loss 563, target 575, deeply oversold, volume spike, positive divergences, crossover buy, set for a bounce, Devina.
And not talk about one stock, and that is Rbl Bank, both technical and fundamental perspective. Sameet, to you first. Rbl, technical or derivatives, what do you do here?
See, clearly there has been no respite for this particular counter since last 2 months, and the correction that is happening with massive volumes in cash segment. So as of now we don't see any respite in this counter. Any bounce back towards 340, 350 is likely to get sold into. On the low side, then psychological level is somewhere around 300, but before that we can also move towards 285, 280.
Okay, we'll get in a fundamental quick call on RBL from Parthiv, and then we move on to the next one. Parthiv, Rbl Bank.
See, unfortunately, what has happened is this is a bank which had at one stage done extremely well, and after which all spate of negative news, whether it is starting from their exposure with Syntex Industries, which was relatively small. Then the management came out, talked about the increase in terms of the credit costs and also the higher NPAs, and which was guided in last quarter, post which they came out and talked about the growth is going to be slower, and the worst news, which was, I think, the talks about the insider selling, though the management has clarified yesterday, but all this certainly hampers the sentiment. And this was one bank which was, I would say, kind of decently owned by a lot of smart institutionals. And we know for the fact that irrespective of whatever may be the future outlook, whenever such spate of negative news comes, which were not really expected, say a couple of years back, they are first sellers, and then they talk about the fundamentals going on.
Okay.
So I think our view
point well taken, Parthiv, point well taken, but the pre-open session starting off, so we just need to address that. Well, here's how the pre-open rates are looking thus far. All over the place. Remember, the SGX Nifty already indicated they will start off marginally lower, so don't expect any big fireworks on open, but individual stocks could be in focus. Watch out for, I dare say, Rbl Bank and Yes Bank. Those are the top two movers in trade yesterday, so just bring those up quickly and see what they are doing. Rbl Bank marginally higher. Yes Bank from the index started off very low, and ended very low yesterday on that downgrade, and likely to start off about 1% lower as well. And then of course watch out for the reactions that will come in for the sugar companies. Maybe they will mark all of that. Let me just quickly mark what the index moves are up to. Coal India is showing this reactionary 10% downtick. It won't be that bad, but let's wait and watch. Let me not preempt. I doubt it'll be 10% downtick, so keep that at the back of your mind. There's some weakness in Indiabulls Housing Finance, maybe because of that talk of that Nifty, or that announcement of the Nifty exit. Maybe there's a sentimental impact there, though I don't know it'll last. And speaking of that, Nestle should come up on your screen. Let's see if that is showing any positivity. And last but not the least on the index, want to mark Sun Pharma. Positive news as reported by the Business Standard. Let's see if Sun Pharma has, maybe if not a 10% reaction, then at least a positive reaction today.
All right, and some of those digital news companies, media actually, which have the digital news component, DB Corp, Jagan Prakashan, HT Media, if any of these, Z also does have it. It's unchanged right now. So Jagan Prakashan's up about 2% in this session. HT Media, DB Corp are the other names to keep an eye on. HT Media is up 17%, so that's not bad going at all. And DB Corp is the other one. And also Trend, to see what happens to that stock with regards. All right, there's nothing much there, but 0.75% higher for Trend. J&K Bank is down 13% this morning. You've got the likes of a Sadbhav, which is down about 8%. Z-Learn's down 7%. HCL Infosystems is down about 6%. And Lakshmi Vilas Bank, that's down about 5% on the news. Of the top management resigning. And then you've got Kalpataru Power, Manpasan Beverages all losing out in the session. Amongst the gainers, Thomas Cook is up 20% today. That's moved up. But then you've got the likes of a J&K Bank now, which is up about 14%. Adani Enterprises up 10%. Hathway Cable continues, is up 8% today. And Spark, following what Sun Pharma has been doing, is also up today in the session. But again, give a chance to these stock prices to normalize a bit. The index is at about 11,000, on the brink of it, about 0.5% lower. But let's talk about Nestle coming into the index then. And Parthiv, obviously the volumes in Nestle are not all that high, but this will definitely, do you feel what Britannia did post entering into the index? I mean, it was at 32.90 at one point, trades about 2,600 now. Do you feel you could see the curse of the index on Nestle too?
That's a great question, and that's happened in the past in terms of any good company entering into the index, deservingly so, has not had a great run. But I think I would surely suggest all the viewers of Bloomberg Quint to read a wonderful piece on Nestle, which is posted on the Bloomberg Quint website. I think this company has really innovated well. They are targeting segments where they can be market leaders and have great market share. And we know for the fact that Nestle globally is the world's largest FMCG player, and they would have like thousands of products which are still not penetrated the Indian market. So besides the strong brands that they have like Maggi, Nescafe, a lot of other things can come up in India. And now with even the FDI rules, I think opening up should benefit a company like Nestle. No two ways about it. It's a very, very expensive stock, but deservingly so. I think the return ratios are one of the best in the industry. And still, if I were to see, it's like a 110 crore sort of a market cap, which can easily scale up to a 3 lakh crore market cap, something very similar to HUL over the next 5 years. So it can still be a great story for anybody wanting to own it. But if at all the curse of coming into Nifty works in terms of a 10% sort of a correction from here, I believe it will be a great buy.
All right, that's Nestle India. What would you do on the charts though, Hemen, Nestle, and also would you sell Indiabulls Housing Finance?
Well, Devina, Nestle is a very illiquid stock, so difficult to track it. But yeah, we posted a fresh all-time high. We continue to do so. We are in a some humongous 30-year-old uptrend. So not much to go on. I mean, it continues to look positive. As far as Indiabulls Housing Finance is concerned, Devina, no, I think we're oversold. So I would be slightly cautious. Maybe there is some near-term pressure, but till it doesn't close below 425. I wouldn't short it. It's still struggling over here, but it's not worth a shot.
I want to go back to the point you made about the coal mining part, the merchant coal mining. Do you think this has a really big impact on Coal India? Because obviously the problems here may not be really of FDI. The problems are of land acquisition, shortage of rakes, problems which Coal India themselves have not managed to deal with. So what makes you think that the others are going to have any better luck?
This is for Parthiv, right?
Yeah, this is for Parthiv.
That's a great question, Devina. I think one might want to blame Coal India for not having higher production. But if you see the crisis of infrastructure that a lot of industry bodies that have been complaining to the government, and I've got lucky in terms of trying to interact with a lot of industry bodies who talk about the fact that something like coal, which comes from, say, Australia to the Indian port, if, just to give a ballpark figure, if the cost of the logistics is like $100 per ton, not even $100, I would say $10 per ton, the same coal comes to the end user's plant within our country at almost $20-25 per ton. So this is the problem that even I think the FDI opening up will have a lot of challenge in, and that is why I believe that any sort of FDI coming in commercial mining is not going to happen through a 100% route, because a lot of foreign players know that there are still some domestic players who can still mitigate waste in our country and be more efficient in terms of having a joint venture sort of a modus operandi. But this certainly brings in a lot of capital, and I believe that now that the government has opened doors for FDI, and they know for the fact that in the past commercial mining has not been successful in terms of foreign capital wanting to show interest in the country because of the infrastructure problems. I'm sure the government will work on things like dedicated freight corridors and improving the infrastructure connectivity from places like a coal mine or an iron ore mine right till the places where it is required. So I hope the government capex also drives the sentiment in terms of having a lot of capital come into our country. And I think that's the only hope that one can have to see a lot of FDI coming into the country in the commercial mining space.
Some rapid fire questions because 2 or 3 minutes left before we get to the to all you need to know. Sun Pharma and Sun Pharma Advanced Research are up and about in the session today. The news, of course, is that SEBI's cleared Sun Pharma, find no merit of allegations of fraud. This is, of course, on the probe that was on. Now, both the stocks are doing very well. Sameet, Chavan, on the charts first, would you go out and trade either a Spark or a Sun Pharma today?
See, we have been closely tracking Sun Pharma. This stock has been struggling around its 200-day average, which coincides with its multiple resistance zone as well, around 440, 442. So one has to see, whether this stock manages to sustain above that important resistance or not. So if it stays for, another half an hour beyond 442, then probably yes, we could see, further short covering move, probably towards 465, 470. So, first half an hour I'll avoid. But if stock sustains beyond that important resistance, then probably one can look for initial target of somewhere around 470, 75.
A quick thought, fundamentally this clearance, would it induce you to buy Spark or Sun Pharma?
See, couple of things, Neeraj. Purely talking about Sun Pharma, they have had a course corrective action in terms of trying to improve corporate governance standards. And number two, this certainly helps to soothe the sentiment. But I think the markets will be focused on future earnings in terms of how their specialty pipeline and how all the capex that they've done in that pans out in terms of better numbers that they show. And Lupin and Sun Pharma both have been talking about the price erosion now declining, which is always a good trend. But I think a couple of next few quarters for these two companies is going to be very, very important for the investor sentiment to change.
Okay, but the bigger news, of course, seems to be as the pre-open rates have settled down, and that Devina was talking about the Nifty exit and entry. Renewables Housing Finance seems to be the biggest impact on the Nifty today, down about 5.5%. Keep that at the back of your mind. Sun Pharma is the top gainer, so the FDI-related news not quite gathering any kind of momentum on the companies, save for maybe Adani Enterprises, which has got this move. We'll talk to Parthiv about it. It's about 1.5% higher in trade. Let's wait and watch what happens there. Lakshmi Vilas Bank, where the MD and promoter is resigned, is probably lower as well. But aside of that, it's business as usual. Let's tell you all that, since we are minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, the government has allowed 100% FDI in merchant coal mining and relaxed sourcing norms for foreign players in single brand retail. It has also brought in a 26% net on FDI investments in digital media.
The cabinet has also announced a 6,268 crore export subsidy for sugarcane farmers, says the amount will be transferred directly to farmers.
The periodic rejig of the Nifty 50 index will see Nestle India replacing Indiabulls Housing Finance on the index from September 27.
And Axilia Solutions reported a steady quarter with revenues up 10.2% and EBITDA margins expanding to 36.5% versus 35.9%.
And lastly, the Committee of Piramal Enterprises has deferred the issue of NCDs of up to 3,000 crore rupees to a future date. That stock is down about 1%. Just very quickly, a couple of stocks that are moving around. We've discussed Indiabulls Housing Finance then. Any of the sugar names, Hemen, small upticks today, will they get sold into, or can any of them, Balrampur, Dhampur, for example, make a further move upwards?
No, I don't think so, Neeraj. We're facing some resistance from the 55-day exponential moving average as far as Balrampur is concerned. So, I think what you said makes sense. It might get sold into. Dhampur is slightly differently placed. It seems a shade better because it hasn't bounced back. So, Dhampur looks a shade better than Balrampur.
Okay. Bajaj Hindustan's up about 5%, smaller name there. Yeti Parry, Sri Renuka, small names doing okay for themselves. The other one is Hathway Cables. Pull that stock up to see what it's doing currently. It's had a spectacular run post the Reliance AGM. The stock today's session is up about 3/4, but in the last 1 week, I think it's almost 48% higher. Do you track this one, Hemen?
Well, as far as Hathway is concerned, for obvious reasons, it's been volatile. Broke out of the range between 15 and 32, went up to 38, came back to 28 and up again. I'd keep 32 as a stop loss. Further upside possible, but it's been a mad, crazy move. So sustainability, I'm not sure. I'd play safe with a stop loss at 32, but further upside seems possible.
Anything within the real estate pocket, Sameet, Chavan, that you're liking? Yesterday's session, so Oberoi Realty, on the back of some clarifications of the IT personnel leaving the premises, did well. Do you feel that there could be more upside here to the stock?
See, within this space, we have been closely tracking Berger Enterprises, which did well. It has been consolidating since last 3 weeks, and yesterday we saw a decisive breakout happening in this counter. And if you look at the overall volume activity yesterday, we can see more than double of its average daily volume. So stock is poised for further move, can head towards its 52-week highs of probably 212, 213. So Brigade looks good. On a minor dip, probably one can go long probably for a target of 212 and keep a stop loss somewhere around 192.
Parthiv, I don't think we have Parthiv right now. We'll probably go to him a bit later. But, a lot of talks about what could come out with regards to the real estate announcements from the FM and what comes about in terms of some dole-outs their way. But
maybe
yes,
today.
Yeah, today. So that's an important segment of the market to watch out for. But aside from that, quickly, some top calls from both our experts this morning, our technical experts, before we hit market open. Hemen, what about you? First up.
Yeah, I have a sell on Bajaj Auto and a buy on Cummins, Devina, because I think both one the sell, one the buy, because market is still iffy because of the expiry day, Devina.
Okay, Sameet, what about you? Sameet, your top call?
I'll go with Escorts, 3 days uptick and then muted session. So I would interpret this as a good buying opportunity. Target at 518, stop loss 477.
Okay, gentlemen, stay on. Sameet, Chavan, as well as Hemen, thanks so much for taking the time out and joining us today and giving us your perspectives. Really appreciate your time. Parthiv, stay on. We'll take in one final thought from you, maybe your top call before we thank you. But 14 seconds left for the markets to kickstart trade. The question only is, once we start off lower, will we pick up steam during the second half of trade because it's the expiry day, or will we succumb to selling pressure the way we did in yesterday's session, because yesterday we did see a pull down, more so in the second half of trade. Here's how we're starting off. Maybe less than 0.5%, a third of a percent, but around there, about 0.5% downtick on the Nifty 50, Sensex 152 odd points, the Nifty Bank about 117 odd points in the session today. The mid cap and the small cap indices down in the session, about 0.25% lower for the mid cap space. The small caps though lying slightly flat in the session. Bring up the heat map and show you what's moving and what's not. Well, more red than green on the screen. Indiabulls Housing Finance, the exit news, and there is a trading reaction down there, 5.5%. Yes Bank continues to slide lower, another 2.5% down in trade. Tata Steel, JSW Steel, Coal India, all of them down about 1% apiece. There is weakness in Hindalco as well, so that's the fourth one, which is looking slightly wobbly. ICICI Bank and SBI looking about 1% lower in trade. What's doing well? Sun Pharma, the sole performer, up about 3% in trade. Power Grid marginally higher, but essentially there's only one stock which is worth mentioning, and the gainings list at least, that's Sun Pharma, which is about 3%. Aside of that, it's a very quiet morning for the gainers at least, a lot of losers. A couple of stocks or a couple of pockets that one should watch out for. One of them is Rbl Bank, of course. Big gash in trade yesterday, and that slide continues. Another 2.5-3% gone for RBL in the session today. And the sugar names, let's see if there is a positive reaction on a day when the markets have started off lower. Marginal upticks there. Sri Lanka about 3.5%, but that's almost a penny stock really. Dhampur and Balrampur Chini marginally higher in trade. Devina, what are you spotting?
Well, let's take a look at the media houses first, and then we take a look at some retailers, particularly Trend, to see if there's any meaningful impact there. HT Media was up 17% in pre-open, but it looks like it's opening lower by about 6.5% right now in opening. DB Corp, Jagan, Prakash and Trend are some of the other names to keep an eye out on. Other losers include the likes of a J&K Bank, which is down about 6%. Lakshmi Vilas Bank is down 5%. Then you've got Network 18, which is down 5%. TV 18, which is down 5%. The likes of Minda, Co-op 3%, under Walkhard is down. Aban Offshore loses a bit. So many more losers this morning, almost double the number of gainers. Spark moves up 9% following Sun Pharma. Jet Airways is up 5%. CG Power holds fort about 5% higher after yesterday's move. Max India is up 4%. And like we highlighted, some of the sugar names are doing well. Thomas Cook is up about 2.5% in the session. 388 stocks have advanced. We've got about 628 stocks which have declined in the session.
Well, so those are some stocks that you need to monitor. Parthiv, before we thank you, one top idea from your end, something that you would find worth investing in.
Sure, Neeraj. Maybe at the risk of repeating this, and probably this is a stock which I had recommended on your channel long back at lower levels. But again, it reinstates my conviction that this is a great bet to even own at this juncture, which is a company from the paint industry, which is Berger Paints. See, Neeraj, we know for the fact that in this industry, the top two companies are Asian Paints and the second best is Berger Paints. And despite having some names in the MNC segment, these MNC segments have not been able to scale up the way these two Indian companies have scaled. And the only reason is the very strong distribution channel network that they have, which is not very easy to replicate. And the best thing is, despite the fact there's slowdown in the economy, there's slowdown in housing, slowdown in industrial, these two companies have gained market share. And as a result of which, despite the slowdown, what we have seen is positive momentum in their volume growth, which is a very, very heartening sign. And they are continuously expanding their capacity. And more importantly, they have maintained their margins extremely well in terms of the volatility that we have seen in crude and titanium dioxide prices. So I think, no doubt, the favorite is Asian Paints. Valuations are slightly more expensive there, but I don't see a reason why a number two player like Berger Paints over a longer horizon of time can't catch up and have a similar market cap that Asian Paints has right now over the next 3 to 5 years. So certainly Berger Paint seems to be a very good bet in current market condition. And if at all we were to witness sooner the real estate and the industrial rebound, then I think these guys definitely could do even better than what they're doing right now. So the current trail valuations, which are slightly on the pricier side, would get justified in case of economic recovery.
All right, Parthiv, got it. And obviously, paint companies doing relatively well, growing at about 15%. That's not a bad figure to go by. Expect the entire industry to become a 70,000 crore industry in the next 2 years or so, according to industry experts. But we'll talk about all of that and more. You are Bhat, MD of Dalton Capital Advisors. He's joining us right now on the show. Mr. Bhat, thanks very much for taking out the time. Slew of measures announced by the government. The question that everyone's been asking is still, is it enough? And will you see any meaningful, translation of that into real numbers?
Well, the market has voted on that already today. So I think the slew of measures are a good sign. At least the government is interested in addressing the issues. But I think clearly the market feels that it is not enough. But I think we really don't have to have a one-to-one correlation with what the market does and what the government does. Because I think these are influenced quite significantly on account of international events. Like, say, for example, the temperature on the trade war has increased. The Iran issue is continuing to fester. Then we have North Korea making some noises again. So all these things are issues that need to be, and of course the US President and Fed are on a collision course. So all these things have influence on the risk appetite of investors, global investors. And as you have been seeing, they have been getting out of the market despite what the government has been doing for some time now. So therefore we can't blame only the government for this. But I think even international investors are concerned about risk. And so therefore India is part of the emerging market group, which is considered risky.
But before the announcement of withdrawal of the FPI surcharge, aside from the fact that you were dealing with the global uncertainties, you had your own internal issues to deal with. Now that the internal issues have been taken care of, does it cap the downside at least? You may not see a meaningful upside. It'll still take some time to come. You need to see earnings picking up. You need to have a more quiet, stable, global platform. But does it mean that the downsides get capped?
To the extent people were really sort of concerned about the domestic event, yes, it would probably cap the downside. But I think there are other issues at play here. So, but for domestic investors, I think which are bigger because FIIs have been getting out. So that is the more important thing than, because the domestic institutions have been voting with the feet. They have been supporting the market no end. But so therefore that is not really a concern. They have been investing. And so therefore what the government has announced might influence domestic investors, but may not be so much international investors, except for that small tax event as far as FII is concerned.
All right. So about $3 billion removed from the markets by the FPIs. I don't think it was such a large number the last time we took a shock like this. I think when we fell about 15% in the month of October. We've fallen about 1,000 points, 1,100 points from the record highs. Does that give you some confidence that the fall has been just about 8% even after such a heavy outflow?
Well, it is all because of the inflows into domestic mutual funds and insurance companies and the like. So they have been supporting. In fact, if you really see domestic institution investment minus FII, it is still positive. So therefore, that is why it is really not falling as much. But if, say, for example, domestic investors also take a view that the markets are not exactly very well valued, we may be able to get at lower valuations, and they don't participate in buying, then I think market can give an effect. The last time this happened, I think the domestic investors are not supporting as much. So I think that is what really is consequential.
Keeping the balance, yeah.
Mr. Bhat, the question is, all of this which has happened, the announcements by the government, etc., are these good booster shots, but leave it at that, or can they materially change the sentiment around the buyers, whatever little buyers they might be right now?
Well, I think it materially changes sentiment for the domestic investors, but may not be with the international investors. But for them, first of all, they have to take a view that it is worth investing in emerging markets. Then in India, then they will talk about stocks. So therefore, I mean, it has addressed a third sort of issue, but the first two issues still remain. So therefore, if money is not being allocated to emerging markets and India, so it doesn't matter what you do in India.
Okay. What about domestic investors now? 2 or 3. I mean, for example, how are you going out buying right now? Are you going down and buying the beaten down names because valuations are in favor, or are you still sticking to the tried and tested even if the valuations are expensive?
Well, I think in markets like this where valuation is not exactly on your side, at least on the macro, the index sort of valuation. So I think it's always better to be invested in the leading names which are corrected, because they might actually bounce back faster if there is an economic turnaround than the beaten down stocks, because most of the ones that are beaten down have been beaten down with good reason.
What about names which haven't corrected? I mean, I'm seeing the last few days, the markets are giving favor to, say, for example, those expensive insurance companies, 1 or 2 AMC names. The HDFC Kotaks are still leading the charts as well. Is that pocket out of the investment grade right now because of the valuations?
No, valuation is, of course, I mean, the market is completely polarized. The good companies are quoting at very high valuations. The bad companies have been beaten down very badly. So I think this polarization will continue for some time till you really see the economic upturn and potential for the beaten down stocks to come up. So that is really not exactly on the horizon as of now. So therefore, people continue to go into the marquee names and hide there, as it were.
Do you feel, one needs to look at, not just on the back of, the announcements that have been made, but do you view retail as a pocket to be a value creator alongside with some of the others like, metals and mining as a space, which has not seen an uptick since quite some time now? So it is a laggard of sorts in that sense. Real estate and what the expectations are in terms of what the FM will announce. Do you see all of these having any sort of interest in terms of allocation?
I don't think they are the favorite sort of sectors for investors.
Still with financials?
Still with financials. I mean, because there also the polarization is complete.
Yeah.
The good ones are really valued very expensive, but still there is interest there. But the bad ones have negative news coming every day. So therefore, I don't think anybody is really falling over each other to buy those names. So I think that polarization you can see across sectors, whether it is, say, for example, financial services, even for that matter, autos, industrials, everywhere it is there. So therefore, I think it is much better to be.
You think autos are turning the page?
If you're a medium-term investor, if you've got a 2-year view, I think these are good values to invest in the best names in autos. Okay. Because I think the problem there is episodic, because basically it is BS6, it is because of these bunched up insurance premia, it is because of NBFC crisis. All these will get solved in a matter of a quarter or two. And I think thereafter you will see, I mean, it is not as if, as I'm fond of saying, it is not as if public transport system has improved so dramatically in India that personal transport is not required. So the demand continues. It is just that the finance is not probably available now as it was available earlier. So when things come back to shape, I think they will do well.
Well, Rbl Bank is in the green today, and that's a respite for somebody who's invested there, 324, 3.5% higher in the session. There's also some gains to the Sun Pharma Group, Sun Pharma and Sun Pharma Advanced Research. But the kind of move that we've seen in an Rbl Bank, Mr. Bhat, or for that matter, the cracks that we saw in a DCB, Federal Bank after the results, some small thing gone wrong, and a few quarters of gains given away in a single day, etc. Would these make these names a bit uninvestable right now, or would you be open to looking at some of this on a merit basis?
Well, I'm not talking about specific stocks, but
Sure,
quite a few of these stocks, such stocks as you were mentioning, they were sort of, as they say, priced to sainthood. So, so therefore,
Wow.
when they are seen to be no longer saints, I think then all bets are off. I mean, that's why you see them halving and stuff like that. So, I mean, this is how it works. So, once you are at that level, at that exalted level, I think small mistakes count hell of a lot. So, but it takes a long time to get to that sainthood, and once you are in sainthood, you have to behave very well.
Yeah, but since that hasn't happened, and now the valuations are not at sainthood levels, but have come off, are they worth looking at, or would you still prefer looking at the saints?
But I think the issues that have come up, because once it is at sainthood, you think that the corporate governance is the best, and all that is disclosed is absolutely perfect. They don't have anything that is sort of hidden, and once you come to realize that it may not be true, then I think the whole game is out. So therefore, I think it takes some time for them to get back into sainthood.
What happens, with regards to taking a slightly more defensive bet right now, considering that you anyways anticipate growth and the other variables that work in favor of high beta moving have to come in a few quarters down the line. So instead of sitting on cash, is it prudent to deploy in defensive, so you won't take such a short call?
If you have to be in equities, I think defensive is the way to play. But you can be defensive without being in equities. But if you have to be in equities, I think defensive is the way to play, because there is no point. I don't think the market rewards great adventure today.
So IT, pharma, FMCG?
At best neutral.
No. What I mean to say is IT on your list of investments?
Well, I think this is one sector where you have to be neutral, because that's a very important part of the index. But otherwise, if you really see there are structural changes taking place, I think there's still a mismatch between the growth momentum and valuation. So therefore, I think IT will have an extended period of time correction, if not a sudden price correction.
On that note, Mr. Bhat, take a moment to thank you for joining us today and giving us your perspective. Appreciate your time.
My pleasure. Thank you.
Thank you.
The markets down, the bank nifty again correcting quite viciously. Not vicious is a strong word, 200 points lower. But lots more to talk about. On the other side, we were talking about autos and the FDI moves, and that's what we'll talk about. On the other side, the impact of the protection cuts on the automobile sector with NK Minda of Minda Industries, and then the changes in FDI rules in Singer brand retail with Kumar Rajgopalan of the Retailers Association of India.